How to use credit lines to pay off your home faster. What if the biggest financial mistake you're making right now is paying your mortgage the way the bank told you to? Sounds crazy, right? You see, millions of homeowners are blindly handing over interest payments every single month without realizing there's a smarter way out, a way that could cut years off mortgages and save tens of thousands in interest using nothing more than the income you already have. In this video, we'll show you how a widely tested and highly reliable method can help you flip the system, pay off your home faster, and actually keep more of your hard-earned money. But before then, let's talk about something most people never realize: the fact that your mortgage was actually designed to work against you. Why traditional mortgages work against you? When you first take out a mortgage, say a 30-year loan, you probably think, if I keep making payments every month, I'll slowly pay off my house. But here's what really happens. For the first 5 to 10 years, most of your payment, sometimes up to 80%, goes straight to interest, not the actual loan. You're not really building ownership in your home. You're mostly paying the bank for letting you borrow their money. That is, the bank gets paid first while you get what's left. It's like jogging on a treadmill. You're working hard, but not moving forward. Let's break it down. Imagine you take a $250,000 mortgage at a 6% amortized interest rate over 30 years. With monthly payments, you don't just pay the $250,000 back. You also pay about $289,000 in interest spread out over time. That's a total of nearly $539,000 for a $250,000 loan, more than double the original amount. Why? Because with amortized loans, most of your early payments go toward interest, not the actual loan. So in reality, you're not buying a $250,000 home, you're signing up for a $539,000 journey. And here's the part most people miss. If you skip payments or keep refinancing, you restart the cycle. More interest, more delays, the bank wins again. But what if there was a way to change the script in your favor? What if you could skip all that early interest and start paying off the loan itself right away? Well, that's where a HELOC comes in. When used the right way, it lets you take a smarter path, the kind that lets you stay in control and make real progress faster. Now, what exactly is a HELOC and how does it work? Let's find out together. What is a HELOC and how does it work? If you own a home and have been paying down your mortgage for a while, there's a good chance you've built up something called equity. Think of equity as the portion of your house you truly own, the difference between what your home is worth and what you still owe the bank. Now, here's where it gets interesting. You can tap into that equity using something called a home equity line of credit. That's HELOC. A HELOC is not like your regular mortgage. It's more like a big reusable credit card, but attached to your house. The bank gives you access to a pool of money based on your equity, and you can borrow from it whenever you need, repay it, and borrow again. You only pay interest on what you actually use, not the full amount available. Even better, HELOCs are usually interest only for the first few years. That means lower monthly payments and more flexibility. And unlike your fixed mortgage, the HELOC is open-ended, meaning you can throw extra money at it and lower your balance faster without penalty. So instead of being stuck with a rigid mortgage schedule that favors the bank, you now have a tool that's fast and flexible and that opens the door to a powerful strategy. Because when you combine your income, expenses, and a HELOC the right way, you can redirect your cash flow to attack your mortgage head on. But you need to know how the strategy works and why it could shave years off your loan and save you tens of thousands in interest. How to use a HELOC to pay off your mortgage faster. Imagine your mortgage as a huge rock you're slowly breaking down with small monthly payments over 30 years. But with a HELOC, you're not just chipping at it. You're hitting it hard and fast like using a sledgehammer. Here's how. Instead of letting your money sit in a regular bank account where it doesn't do much, you move it into your HELOC. Why? Because every dollar sitting in your HELOC works for you by lowering the interest you owe. This is how it works. With a mortgage, the bank calculates interest once a month, so your money doesn't affect things much day to day. But a HELOC calculates interest daily. That means even if your money stays in there for just a few days, it helps reduce how much interest you're charged. Also, rather than making small monthly payments on your mortgage like most people do, you use a large chunk from your HELOC to make a big payment towards your mortgage principal, the actual amount you owe. That big hit lowers your balance right away, so the bank has less to charge interest on. Then, as your paycheck comes in each month, you use it to pay down the HELOC. That frees it up again so you can repeat the process. It's like turning your income into a smart tool, circulating it through your HELOC to attack your mortgage from both ends. You're not earning more money, you're just using what you already have more smartly. Think of it like this. Instead of drawing out a spoon for your mortgage every month, you're using a shovel. And each time you clear the HELOC, you're ready to swing again. That's how you save years off your loan and potentially tens of thousands in interest without working harder, just thinking smarter. All of this sounds exciting, right? But hold on. Before you jump in, there are some very important things you need to understand. Because as amazing as this strategy is, it only works if you play it right. So let's talk about that next. What you must know before trying HELOC. HELOC is powerful, but it's not magic. And it's definitely not for everyone. Using it to crush your mortgage is like giving yourself a financial chainsaw. In the right hands, it can clear a path to freedom. In the wrong hands, it can do serious damage. This means a HELOC has its own pros and cons. But we're here for the pros, right? And that's why some things must essentially be put in place to get the most out of it. First of all, discipline is everything. A HELOC is revolving credit, like a giant credit card tied to your home. If you're the type to see available credit as spending money, this strategy can backfire fast. You must treat the HELOC like a temporary tool, not an invitation to waste resources. Secondly, this strategy only works if you spend less than you earn. This is because the magic happens when your income is greater than your expenses. That difference is what pays the HELOC back and keeps the engine moving. If there's no margin, there's no point in all of this. Also, remember that HELOC rates are variable. They can change with the market. That means your interest costs could go up unexpectedly. So always read every tiny detail, understand the terms, and be prepared for a backup plan just in case. And most importantly, this isn't an all-in-one trick. You need to run your numbers, understand your risk tolerance, and possibly speak with a financial advisor or mortgage expert before getting into it. That said, if you're financially steady, budget conscious, and ready to think like an investor, this could be one of the smartest ways to pay off your home faster and build real wealth. Because at the end of the day, this isn't just about saving money, it's about owning your home and your life on your terms. In essence, the 30-year mortgage system wasn't designed to make you free. Instead, it was there to keep you paying. But the moment you understand how to move money with intention, not just effort, you unlock a different game. A smarter game where your paycheck becomes a tool, not a trap. And no, you don't need a financial miracle. You just need a shift, a better way to use what you already earn, and a plan that makes your money move with purpose. If this video changed how you see mortgages and helped you learn how to take control of your financial life, give it a thumbs up, subscribe to our channel, and if you haven't already, share the video with someone you know who's also tired of long-term debt. Have you got some questions? Drop them in the comments below. We read them all and we're here to help. See you in the next video.